The Federal Reserve cuts rates, and the United States resumes trade talks with China. Could this be what the market needed to continue its march forward? Or is this a sign of potentially more trouble on the horizon? The action starts now. The markets advanced in July on encouraging earnings news and on anticipation that the Federal Reserve would cut interest rates. That anticipation grew after Fed Chairman Jerome Powell's mid-month testimony on Capitol Hill. The S&P 500 gained 1.3% in July and passed 3,000 for the first time. The Dow Jones Industrial Average rose 1% and the NASDAQ Composite increased by 2.1%. The Fed made a quarter-point cut on July 31st. Chairman Powell did not suggest that additional cuts were coming. Addressing the media, he called the move a mid-cycle adjustment to policy. Some analysts see the Fed cut as a precaution. Its latest policy statement cited global developments and muted inflation as factors, and those are concerns. Yearly inflation is still under the Fed's 2% target. At last look, China's economy was growing at its slowest rate in 27 years. Trade talks resumed between the U.S. and China. On July 30th, trade delegates met face-to-face in Beijing for the first time in months. The market certainly wants a quick resolution to the trade dispute, but the reality may be different. In late July, Treasury Secretary Steven Mnuchin commented that it could take a few more meetings to see any progress. This month, the Fed and U.S.-China trade relations will likely remain top of mind on Wall Street. Note that the Fed's annual Jackson Hole Symposium starts August 22nd. This event attracts central bank officials from around the world, and the street pays close attention to what they say. There will also be plenty of earnings calls as the second quarter earnings season rolls on. So my attention this month will remain on domestic and international equities. On the domestic front, I will continue to focus on large cap growth, small cap growth, and mid cap growth. In particular, I'll be interested in the technology, utility, industrial, communication services, and financial sectors. As for the international equities, my focus will remain on Asia Pacific, emerging markets, and European emerging markets. So keep in mind, nothing I talked about today is going to be a recommendation. My interest may change as I continue to monitor the Fed's moves and trade talks. So regardless of what happens next, investors like you need to have a simple and yet solid financial plan that reduces risk, costs, and taxes while securing the necessary income you need to maintain your lifestyle throughout retirement. So if you don't have a plan or you're not comfortable with the plan you have, call me to get pointed in the right direction. I'm Chad Kuntz, and that puts a wrap on the August 2019 Market Action Report. Thanks for joining me. It's time for me to get back to the markets, and that action starts now.